the accounting stuff needs to feed into the management reporting. And that's, with the PE backed entities I worked at, it was very problematic because, what I was producing through the controller level in terms of everything on the financials, there was disconnect with what was getting reported on like the monthly P&L slide decks. There was a lot of like quote unquote reclassifications of things to make what was in the ERP be in the correct buckets for the PE reporting. And then there's this manual process of having to constantly rec those pieces out. So I mean, you have to build the data, and if there's presentation issues or reclassifications, like ERPs usually have ways to do that to where you're not having to do it manually every single month.
And would you say with PE, which is I'm referring back just to say it out loud, private equity, would you say that private equity firms, and you've worked both with private equity firms and worked, I imagine, in public firms, but do you see private equity firms needing more detail or different levels of detail because their money's involved at a higher level?
Yeah, well, and I think that the PE firms are looking at like, okay, my EBITDA, what is, potentially exit on this? And so it's kind of I would say just from a pure finance accounting perspective, it can be frustrating when they're like, oh yeah, we spent all that money, but it's an EBITDA add back. And they're like, so it doesn't count. I'm like, you spend a bunch of money on something. Like it does like, and they're like, no, 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 it's EBITDA add back. And so that was always something I kind of struggled with that they're like, oh yeah, we had to do a bunch of money on an acquisition and had to redo redo the cash roll 8 times and have 6 different consultants involved with it, but it's a neat add back.